And it's such an honor and a privilege to be chatting to Nico Kleynhans this Thursday morning. And Nico, it's always something that we as normal people kind of wonder when it comes to financial advice. And what are financial advisors doing themselves? So I love that question that potential yet nervous client asked you about what does your investment portfolio look like?
Yes, I think it was a very brilliant question because, in a sense, it's asking about the strategy that at that point I'd been in the business for 25 years. Now, of course, I've been in here literally since Van Riebeck landed in the Cape Town area. But, how do I see investments? Because investments is not only about putting away money, it says something about your attitude towards life. And it also says something about your attitude towards risk. Now, in terms of my own life, I've got 4 income streams. It's important that you understand that. So when I tell my clients, you've got to have more than one income stream, I'm telling them what I apply in my own life. And these income streams come from various sources. And the investments that I have come from 4 different asset classes as well. So I spread risk, both in terms of my income and both in terms of the investments that I choose. Now, one of my income streams comes from residential property. So I live in a house, I've bought the house, that is an investment for me. But I've also bought property and I use rental property, the rental on that property as a possible income stream. I also have investments linked to the JSE. Now that those investments are linked to the South African economy. I also have investments linked to the economies of other countries. So I also own shares that are not linked to the South African stock exchange, but to other stock exchanges. And when I invest in those shares, I not only take a risk in terms of the economies of those countries, I'm also making a comment on the exchange rate between South Africa and those countries because I've got 2 issues I have to take into account. And then I have my own business that generates an income stream. And then I have an emergency fund. And this is important. The emergency fund is held in liquid assets. Now, why I'm saying that is I once met a particular person who was an expert in property, and he owned 11 residential properties. And each one of those had a bond attached. And when I asked him what his emergency fund was, he said, I will just sell a property if I need money in an emergency. Now, emergency is what happens if you need cash within 3 or 4 days. And what happened in that particular year is the interest rate shot up to 25%. And suddenly the interest on his bonds exceeded the rental income that he was getting. And he, with many thousands of other property owners, was trying to sell properties in a hurry, and they couldn't get the price they needed. And he eventually lost every one of his properties. So if you're talking about an emergency fund, you cannot say your emergency fund is your credit card. You cannot say your emergency fund is anything that's going to take more than 4 days to raise cash. And that's where a lot of people make their mistakes. They fund everything and then they assume that they're never going to need money in a hurry. And you may need money in a hurry because your son gets into the car and he's not licensed, and he damages the car and the insurance company won't pay. And you suddenly need 40 or 50,000 rand. It could be anything under the sun. And sometimes a relatively small amount of money then leads to damage your whole strategy that you have. The other thing that is important is that when you're looking at certain kinds of investments, particularly the JSE, you cannot take a short-term view. So when we hit COVID, the value on the stock exchange dropped by 34% in a couple of days. So if you're watching your prices of your share portfolio and suddenly 34% is wiped off, you can't now go into a panic, sell everything, lose 40% of the value, because by the time you're selling, you're going to have lost more than 34%. And then 6 months later, you say, oops, I sold too soon. Now you've got to buy back, and you're actually damaging your strategy. So those are the kind of mistakes that people make when they get into liquidity problems. When markets fall, I actually invest, because that's when I can get things today at the prices that I would have paid a year ago or 2 years ago. So in the last 3 or 4 days, the stock exchange has lost value. This is not the time to go into panic. You should be talking to your financial planner and saying to them, why is it falling? Who's doing what? What are your assessments of the next couple of weeks and the next couple of days and the next couple of months, so that you don't go into this blind particular panic? Now, notice, in my strategy, you did not hear the word Bitcoin. You did not hear the word trading in foreign currencies to make money. And the reason I don't do that, it's simply because the risk is unacceptably high. So when you are doing investing, you need to be aware of the kind of risks you're taking, and you cannot put your money on the line in the hope that you're going to make money because somebody's uncle once told your hairdresser's aunt that they made a lot of money on Bitcoin. That is not sound financial advice. That is speculation. And if that's how you choose to go, then you're going to make money. You're going to lose money. So I am not a speculator. I am reasonably conservative, but I do spread the risk. So that's what I do with my investments. Have a good day.
Thank you. Thank you so much, Nico. Some great advice there and great perspective. And again, you might feel that that doesn't work for you. That's fine if that's your opinion. But what we do want to encourage you is to always seek good advice. Thank you for your time, Nico.